Hey guys, it is Ryan with the Rising Group, and
Tony Kemper with the Rising Group.
that's right. So you guys are used to seeing just my mug, and it's not going to be just my mug anymore. Rising Group is growing, and we have Tony, a part of the Rising Group now. Tony, would you like to go ahead and tell us a little bit about yourself?
Absolutely. As I said, my name is Tony Kemper. I've been in real estate and with Keller Williams for a little over 3 years, about 3.5 years. Been independent up to this point and saw a great opportunity to join Ryan and the Rising Group. So here I am.
And we are extremely excited here in the Rising Group. We got big things planned for 2023, but this is a market recap video that for the month of January. So let's go ahead and get right into it. Me and Tony are kind of going to break down some numbers here and kind of discuss some of the stuff that's going on in the market. All right, so we're going to go ahead and jump right over to the median sale price. And the median sale price is for January 2023 is actually, it's down, and it's taken a pretty good jump down, all the way taken down from, it's actually dead even with January 2022's Valley as well. Do we have anything on why we think that might be why it's down all the way to compared to January 2022's?
Well, obviously the interest rates have jumped significantly, really going back to about November, October-November timeframe. So that's impacting things a little bit. And the market is looking at, what's happening now, both from a buyer and a seller perspective. There's less buyers because they're watching the interest rates, less sellers. Because one, there's not a lot of inventory out there, so they're holding off and waiting to see what happens next. And I think that's where we're at right now is a big, let's wait and see from both sides.
Right. I agree. So it's something interesting to monitor. Typically, whenever you see the peaks and valleys, in general, everything is, you're kind of doing this where the peak comes down here, and then in the summer it hits here, and then the peak hits here just a little bit higher, and then it just kind of keeps on going this. Whereas this time, it has gone all the way back down to what January 2022's Valley was. So interesting to see that they're the exact same from 2023 to 2022. Stay tuned to see if that is anything to be developed into. And then let's jump over to new listings. So from new listings from 2023 to January of 2023 to January 2022, we are down considerably, about 500 listings for our entire MLS for this St. Louis area. We're down about 500 listings.
Yeah.
So something to keep monitoring. Do you think us being down listings is going to make the prices get easier and smaller, or do you think it's going to make prices potentially raise?
Well, I think with everything that's happening right now, that the price per square foot is probably going to stay about the same because you've got those two things, battling each other.
Mm-hmm.
Inventory is real low, and there's pressure because of the interest rate hikes. So I think you're going to see it kind of set pretty much steady for a while. We're going to have to wait and see kind of what spring and fall, brings us in terms of, again, increasing interest rates. The Fed's backed off a little bit on that. And it honestly looks like they may stop here, this spring. So that's going to have a big impact. And I honestly think a lot of this is just people adjusting to this new, these quote-unquote higher interest rates that aren't really higher interest rates.
Yeah. Right. And so I think what we're, some of these numbers might be contradicting each other a little bit in the fact of inventory is low, and you guys will see here in a little bit that actually month supply is getting lower as well. Mm-hmm. I mean, there's still buyers in the market, but the inventory is just not there still. But we're kind of seeing a holding pattern right now. Mm-hmm. Buyers are kind of curious what's going to happen. Sellers are kind of curious what's going to happen. And there might be just a little bit of a holding pattern because we're kind of in new territories that we haven't been in a handful of years. All right, let's take a look at days on market. The median for days on market for January of 2022 is actually the entire MLS. The average days on market for 2023 is 34. Mm-hmm. We have not seen that many days on market since 2021. Mm-hmm. So 2022 is just obviously, that was in the peak of January of 2022 was in the peak of crazy low interest rates. And then, somewhere around there, 2022 is nuts. But then things started going up shortly after. So, but yeah, it is interesting, something to take note, so things have been flying off the shelves, but it's interesting to see that, 2021 is when it started getting really, really hot. Mm-hmm. And we're back to that the starting point of when it was getting really, really
Right,
hot as
right.
far as days on market. So, Tony, you had something that you wanted to, that you looked up about interest rates.
Yeah, actually, I was at a seminar a couple weeks ago, and they talked about the interest rates. They talked about the market as a whole, but the thing I found interesting was the mortgage rates. And what came out of it was, we've had some very historically low interest rates in the last several years, really going back to, the early 2000s. And, when we had the housing crisis and all that started, and then interest rates have been very low ever since, and now they're starting to jump. But what came out of that was, if you look at historically from 1990 to 2021, the average interest rate was just below 6%. So, if you're looking and you're thinking about, hey, I'm going to wait for 3%, 3.5% to come back, you're going to be waiting a while. And if you go back to the 70s, from 72 to 21, the historical interest rate average was just a little under 8%. So, if you're my age, 8%'s been the average over that year. If you're your age, the historical average has been about 6.
Yeah.
So let's split the difference.
Right.
Okay, we're going to end up at 7%, kind of as a mean average, maybe over the next several years. So again, we go back to looking what's happening in the market, and we've got a lot of people in the probably 20s and 30s going, well, I'm waiting for it to get back.
Yeah.
It's not going to happen.
Yeah.
And you get people that are baby boomers. They're used to this and saying, you know what, this still isn't too bad. So we're going to be okay.
Right.
So everybody needs to adjust to this and just, move forward with the fact that, hey, we're probably going to be looking at 6-7% as the average going forward.
And that's probably where the buyers that are holding right now are probably the ones that are new home buyers that have never seen, don't even know what the heck 6% is.
Right.
They haven't seen that in a very long time.
Exactly.
And so they got to get used to the market a little bit themselves.
Yep.
It's a pretty interesting thing there. Now, as far as, I think that's a good thing to talk about and kind of segueing into, is it a good time to buy right now? Is it a good time to list right now? Couple different things, and we were talking a little bit earlier about and you were talking a little bit about whether it's a good time to buy. So with that, why is it still a good time to buy right now?
First of all, it's always a good time to buy because, real estate as an asset historically will continue to appreciate. And it's just, whether it be a home, an investment, a second home, whatever it is, real estate's always going to pay long-term dividends. From a seller's perspective, I think it depends on everybody's individual situation. If you're an empty nester and you've got a huge house you're paying huge overhead for and want to get into something smaller, simpler, take out some equity, now's as good a time as any. We're not going to get any younger. If you're a first-time home buyer, absolutely, now's the time because, get out there and get a home now and get started in building that equity. So.
And I think one of the things too, right now specifically, we're in the start of February here. We've heard that from multiple lenders, and I think it's probably almost common knowledge now within the real estate world, that the interest rates could be getting in the 5s again. They're pretty much already there now.
Right.
They're close to dipping into the 5s now. If we get into low 5s, what do you expect? I mean, what do you think the summer market's going to be?
Well, I think things are going to jump crazy because people have gotten used to this, higher interest rates. They've come down a little bit. Let's jump in when we can because odds are they're just going to go back up. And the other thing is, if you're looking now, you're talking about March, April, May timeframe before you're moving into a new house. And if you're thinking about schools and that type of thing, now's the time because you want to do this. If you're going to change schools or you're going to change neighborhoods, now's the time to do it so that you're there and established by the summer and ready to go come fall.
So, and that's the thing too is, so whenever, if we get into those 5s, so some buyers are waiting for that opportunity. So would you prefer to have something where you're in the 5s, but you're competing on other houses? Because if that happens, buyers are going to be coming back in the market with lack of inventory, and bidding wars are going to probably get crazy again, just like they did in 2022. So would you rather have maybe a little bit higher of an interest rate right now, and then you can always refinance down the road if it got lower, or wait till it does get lower and then potentially have to pay $30,000 more, being a bidding war and things of that nature.
Right.
So there's definitely benefits to buying right now. And and once again, it comes down to I've said this a bunch of times. If you're not an investor,
Mm-hmm.
and you're going to be in your house for the average person, is it 7 years now that a person stays in their house
Yep.
on average, you're going to be fine regardless.
Well, and the other thing I think I would recommend everybody is get with lenders and get with
Yeah.
multiple lenders, because talking to some of those people, there's a lot of creative financing going on right now.
Yeah.
That I don't want to get into the weeds on, but go talk to 2, 3, 4 different
Yeah.
mortgage lenders. Find out what's available out there.
Right.
Educate yourself on what they've got, because they are getting creative and they have got some great programs that are going to fit different people in different
Yeah.
ways.
Yeah. Side note on lenders, guys. Don't call a random lender if you don't have any kind of experience. The biggest thing that we could recommend whenever it comes to lenders, if you have nobody that you know of as far as lending, and you're reaching out and talking to a random person, that is the biggest way to screw up a closing.
Mm-hmm.
So I think me and Tony have both came across many situations where a client, the buyers in a deal, they have a random lender that nobody's worked with, the buyer's agent, the seller's agent, the buyer themselves. No one knows who this person is. And inevitably something bad happens. So always talk to somebody, either a family member that you have trust in, or we have lenders that we have trust in, someone that has some sort of experience with the lender.
Yep.
Because
Yep.
the lender institution can be great, the specific lender can be bad, or vice versa. But if a specific lender is bad, the institution that is a great lender could be a nightmare if that lender specific person is bad. Okay, so last thing we want to go over is the percent of list price median for January. So 2021, 2022, 100% of list price. So houses listed at a certain price, the median average is it's going to close at the exact same price that it was listed at.
Mm-hmm.
2023, we're down. We're down a big percentage here. We're down to 99.1.
Yep.
Not really much of a difference here.
Well, it just emphasizes again, when you list your house, list it right. Get in that wheelhouse, because people are going to pay the right price if it's listed properly.
Correct.
If you've got it too high, it's going to sit, and if it sits, then you're going to have a hard time. And you can go back and look at how homes have sat for a long period of time, and that price continues to fall in terms of getting what they want against the list price. So, work with us, work with your realtor when you're going to list a house, get it priced right, and you'll get 99.8%.
Yeah. And that old school mentality, this is really for the listing side. This is telling us the old school mentality is currently not working. And when I say the old school mentality of just typical negotiations, someone might say, "Hey, I want $350,000 out of a house, so I'm going to list at 400, and then we're going to barter back and forth and
Right.
settle at
Right.
somewhere in there." That's the old school mentality of negotiating, but that negotiating is so dependent on what the current market is. So you got to really, really trust your agent on what the market value is of a property.
Yep.
So, Tony, that's all I got. That's as far as stats go. I'm glad to have somebody in here with me.
Yep. It's great to be with you, Ryan.
I get tired of just talking to myself, So, all right, guys, that's all we have for you. Hope you guys have a fantastic day. Have a happy Valentine's.
Happy
That's
Valentine's
coming up.
Day, everybody.
Yep.
See
Take
ya.
care, guys.